People have been paying and complaining about taxes for a long time. The first record of organized taxation comes from Egypt. Pharaoh would send commissioners to take 1/5 of all grain harvest as a tax. Tax practice continued to develop as Greek civilization overtook much of Europe, North Africa and the Middle East in the centuries leading up to the Common Era until nowadays. What are taxes? Taxes means involuntary fees levied on individuals or corporations and enforced by a taxing authority, usually the government, whether local, regional, or national, in order to finance government. A tax is a compulsory and not a fine or penalty that need to be paid by the citizens who are liable to pay it. Besides, payment of taxes should be based on the ability to pay principal. The higher the income of the taxpayer, the bigger the amount of the tax paid. The question is, why do we need to pay taxes? At the most basic level, taxes raise money for government to pay for government spending. Government needs money for providing different goods and services to people such as education, medical, and housing. Taxation is the main source of collecting money for such purpose. Moreover, government look after the welfare of the people. Hence, many countries impose taxes to discourage people from buying and consuming harmful goods, such as alcohol and cigarettes. The comparison between zakat and tax system. Zakat and tax are two different forms of payment. Zakat is a religious obligation that will be used for development of poor people, while tax is the economic needs for development and expenses of a country. Zakat should only be paid by Muslims with a fixed amount determined by Islamic law, while tax should be paid by all citizens and the amount will keep changing by the government.
Types of tax. There are two types of tax in general, which is direct tax and indirect tax. Direct tax is a tax that cannot be levied on others. The responsible to pay is fall under an individual or organization, and the payment will be paid directly to the government. One of the example direct tax is income tax. Income tax is charged by the government towards an individual or business income. Government will use the revenue of this income tax for fund services and provide beneficial goods and services to the society in the country. Next example is corporate tax. Corporate tax is a tax imposed on corporations' profit as country sources of income, and this corporate tax is based on the company's operating earnings. The country with lower corporate tax rates shows their economy are doing well. Here, we can see the different level of corporate tax rates between Denmark, Maldives, and Malaysia's corporate tax. Move to indirect tax. Indirect tax is a tax that can be imposed on other people, and this tax levied is on individual or entity, but it will be paid by other person. Meanwhile, indirect tax, also known as consumption tax. Sales tax is one of the examples from indirect tax. Sales tax is a tax from the percentage of the price of goods sold. GST, Goods and Services Tax, or Value Added Tax, VAT. This tax imposed on most goods and services from domestic consumption purposes. Commonly, the tax is paid by the consumer as it already included in the price of goods and services. The portion of GST will be collected by the business and passed to the government.
Next, moving on, I would like to talk about the composition of tax revenue for different countries. Every country has a different tax revenue because it is due to the level development of a country and also the efficiency of its government to recollect back its taxes from the people. One of the countries that have a higher tax revenue is Denmark. The Danish tax system is a progressive one, which means the higher your income, the more taxes you need to pay, and vice versa. It is also comprises of direct taxes and indirect taxes. The direct taxes comprise of personal income tax rate, state tax rate, property tax rate, church tax, and also corporate tax, while the indirect tax consists of VAT tax, which is also known as value added tax, green tax, excise and custom duties. The reason why Danes pay higher taxes is because they believe in investing in the quality of life, as education and healthcare system and there is free. Besides that, Danes enjoy a very high living standard, as Denmark is known as one of the countries who has the highest income per capita in the world. A country that have lower tax revenues is Maldives. Maldives is basically a country that is reliant on its tourism sector for revenue. During the year of 2010, Maldives Inland Revenue Authority, which is also known as MIRA, was inaugurated to control the tax system in Maldives. Taxes in Maldives consist of direct taxes and indirect taxes. Direct taxes in Maldives consist of personal income tax rate, property tax rate, corporate tax rate, remittance tax rate, and also business profit tax rate, while the indirect taxes in Maldives consist of goods and services tax rate, tourism goods and services tax rate, green tax rate. The reason why Maldivians pay lower taxes is because of the booming tourism industry, as many people from different countries visit Maldives every year. Besides that, 90% of the tax revenue for Maldives came from import duties and tourism related taxes.
Next, moving to relevant issues on taxes. Firstly, inheritance tax. Inheritance tax is a tax levied on individuals' property after their deaths. This tax also paid by a person who inherits money or property from the family members or close relatives. This tax can be found in developed countries, for example, Japan, South Korea, France, the UK, and the US. Due to injustice in the implementation of this tax, there are a few issues arise. For example, in the UK, in 2016, Jeremy Corbyn criticized the implementation of this tax. It happens due to the death of 6th Duke of Westminster, Gareth Grosvenor. He criticized the tax-exempt arrangements of many largest landowners. Next, moving on the issues on windfall tax. Windfall tax is a tax levied by government against certain industries, especially to businesses which gain experience above average profits from economic expansion. This tax focus on commodity-based businesses. Next, this tax can be found in many countries, for example, the UK, the US, China, Thailand, and Malaysia. For the issue, we will be focusing on Malaysia. In January 2020, government imposed 3% windfall tax on oil palm producers when the price of oil palm went above 2,500 ringgit Malaysia per ton. Due to COVID-19 outbreak, many glove companies experienced above average profits. For example, Top Glove Corporation's Berhad. As a result, there is a suggestion to government which imposing windfall tax to this business. Finance Minister of Malaysia, Tengku Zafrul, reject the suggestion because he said that it will discourage investment by foreign countries.
From the discussion earlier, we can conclude that tax is a fee imposed by the local government to achieve some objectives like to increase the growth of the economy, to influence demand level, and to redistribute income from the rich to the poor. Tax also has some benefits to the country like contributing to the health and education sectors. Without taxes, governments would not be able to meet the demands for the societies. The concept of fairness is also arise whenever we talk about this topic. A tax system that is fair is defined as a system that will allow the most deserving people pay the least tax. There are three tax systems that focus on the tax fairness. Regressive taxation is a system that people with the least money pay the greatest tax burden. Next, proportional taxation is a system that requires all taxpayers to pay almost the same amount of taxes. The last tax system is progressive taxation. This tax allows people with lower income to pay the lowest amount of taxes. This is why it is important that citizens need to understand that paying tax is meant to be more than just a money grab from the government and have many benefits to the society.